date. Should investors be more fearful of Putin or Powell? Let's bring in our floor show traders, Teddy Weisberg and Tom Hayes. Tom, give it to me. To me, in the short term, it's got to be Putin, right?
I think in the short term, Liz, you're right. It is Putin. But if you look back to 2014, when they annexed Crimea, when President Biden was vice president, the market was down 7%. The S&P finished the year up 13.69%. Slightly different scenario. But the biggest risk for the market overall is a policy misstep. The odds of a 50 basis point hike moved below 50% after those minutes were out. That's a good sign. We want to keep that short end of the curve subdued. Use the balance sheet to get the long end of the curve a little elevated and get that spread wider. A year ago, the 210 spread was at 160 basis points. It's flattened to 50 basis points. We don't want to see that invert because that would lead to a recession. So if they use the balance sheet more, put supply of the long end of the curve onto the market, that's going to keep that spread wide, keep banks incentivized to keep lending, keep credit flowing, and we could have several more years of expansion.
You know, it's interesting, Teddy. I'm looking at sector performance right now, and, it doesn't look that bad. I mean, IT is not showing some strength, nor communication services. But the CBOE market volatility, the VIX index, the fear index, is dropping. So maybe there is a way for investors to get through this without any fear. What do you think?
Well, I don't think we'll get through it without any fear because smart investors are always fearful, especially of the unknown, Liz. But the question, who are you more concerned about, Powell, Powell or Putin? And I think my choice would have been Powell. No question that we need to be concerned about what Putin is going to do, and that is a big short-term concern. But longer term, it's going to be about the Fed. We'll get through whatever Putin wants to do, but we'll have the Fed forever. And clearly the environment of higher interest rates, which have been well telegraphed, the question is how high and how fast, clearly is going to weigh on the market. I think it's a time to be concerned. In fact, today, I think the market's putting on a reasonably positive performance in spite of the fact, that there's still plenty of red on the screen. But the issue, I think, for investors, Putin aside, clearly has to be the Fed and interest rate policy going forward. And at some point, there will be a tipping point where that's going to negatively impact the markets if they continue on the course that they have projected they will continue on.
Teddy, Tom, thank you. I'm watching the Dow very closely. It's about to take 35,000. It's at 34,992. In fact, it